In today's video, I'm going to cover investing, which is making more money with your existing money in these current conditions. Now, I do realize that this is not a topic that I cover that frequently on my channel, but I also believe that it is one of the most important and relevant right now, especially since I've been following it very closely, and also that if you're interested in making money anyway, learning to build wealth through investing is crucial.
Of course!
So with that, first of all, if you've been following the stock markets or even investing, you'll probably know that the stock markets are especially not doing so well right now, right? But what does that mean moving forward? Does that mean we should add more to these cheaper stock prices, or should we wait if stock prices are actually going to fall more? Well, let's take a look at some of the economic conditions and current events that are sort of causing these sell-offs right now. And the first of these factors, and this is something that most, if not every person watching this video should have felt no matter where you live, and it's inflation, which is essentially the increase of prices of pretty much anything you want to spend money on, including goods and services, meaning that your money essentially loses value because it's more expensive to buy the same things as you've been buying before.
No! God, please, no! No!
Now, there are several causes to this inflation, but I'm going to try to keep it short, so here are some of the main reasons. The first one being easy monetary policy as well as stimulus, meaning that, for example, in the US, the Federal Reserve pumped a lot of money into the economy, giving people a lot more money to spend on, say, goods and services, which allows these businesses to be able to charge more because people simply have more to spend, right?
Right.
And to sort of exacerbate that is people coming out from the pandemic and actually going out, spending on goods and services, and thus driving prices even higher. And speaking of the pandemic, this is also something that was causing supply chain issues, which means that certain materials were getting stuck or there wasn't as high of a supply of these goods and materials, for example, and thus driving certain prices even higher, right? Because if goods becomes more scarce or materials becomes more scarce, that increases or that decreases the supply, but if the demand is higher, that means the prices will be higher as well, right? So you think with people, coming out and going back to work again and supply chains starting to work better with workers coming back to the supply chains, that these sort of issues would subside. But very recently we have another, major geopolitical issue that is causing supply chain issues to get worse again, right? And that's obviously the war in Europe causing issues, right? In terms of especially energy and oil and certain goods and materials that these countries that are at war are supplying, right? And not to mention the sanctions that a lot of the Western countries have put on Russia, sort of having these economic impacts in terms of the types of goods that they purchase from each other and so on and so forth. So with that definitely adds to the pressure of prices, driving them even higher. And not only that, but in China, for example, mainly in Shanghai, we've got these lockdowns, and thus a lot of producers and factories and also parts of the supply chain, right? Important parts of the supply chain are also getting delayed and also shut down in that way, adding even more pressure. And so what do all these inflationary pressures actually mean for investable assets like stocks, and why are they actually going down? Well, to combat inflation, the central banks around the world, for example, the Federal Reserve in the United States, has to do certain things, like especially raising interest rates to combat inflation, so to speak, right? So for instance, by raising interest rates, this could actually curb spending in a bit because they're actually incentivizing people to instead save their money, and also making it a bit more expensive to borrow money to then spend it on more stuff, right? So that's sort of the relationship between rising interest rates, or the Federal Reserve and central banks trying to raise interest rates in order to curb inflation, so to speak. And the main reason that the Federal Reserve and other central banks around the world wants to curb inflation is that, first of all, they don't want prices to go even higher, which means that people might not be able to, especially like people who might not be earning as much, be able to afford some of these goods and services, right? So they want to keep things relatively more affordable, especially for these types of people. And not only that, but if, say, people stop spending money on these goods and services, if they do become more expensive, well, they are already becoming more expensive, right? But they want to sort of slow that down. But if they become too expensive, they're also trying to prevent people from spending too little on these goods, right? They don't want people to stop spending altogether or spending significantly less, lest these businesses who are selling these goods and services, slow down their growth or have worse business, and thus leading to potentially, layoffs and the shrinking of their businesses and thus higher unemployment. So again, the main goals of the central banks, right, and its Federal Reserve, the US Federal Reserve, is to keep employment at a relatively high level, right? They want as many people to be, living decent lives, earning money, and be able to afford stuff as much as possible, which means they need to have sort of this balancing act, not raising interest rates too quickly in order to keep people not only employed, but also making sure that goods and the prices of goods and services don't spiral and go out of control. However, interest rates are definitely going to go up, as the Federal Reserve has already announced, right? And not only that, but they've sort of announced potentially higher interest rate increases moving forward due to how perhaps hot they think the inflation will be, and also perhaps how serious the supply chain issues from, say, the war actually are. So by the way, this is just what the Fed is saying. It's not necessarily 100% true in terms of how much worse inflation will get. In fact, there are some readings right now, especially in the core CPI, showing a somewhat slowing down of this core consumer price index, which is CPI, which is sort of an inflation reading, meaning that if you cut out certain parts of this inflation reading, despite the overall inflation reading showing that there's like a record high and it's still going up faster than before, the core CPI, which again is subtracting certain parts of inflation, namely energy and also certain like materials for food, and both of which, by the way, are mainly affected by the war. So if we cut out these factors from inflation that are mainly affected by the war, which some would say is somewhat of a temporary ordeal, which we'll have to see, but maybe some of the commodity prices are more or less temporary and doesn't really reflect what the overall inflation picture actually is in terms of the economies, especially the US economy, leaving behind, so if we cut these out, leaving behind the factors that are not really caused by the temporary war or some of the issues surrounding the war. Some would say that this is more of an accurate reading of inflation, and if we look at it closely, it's actually somewhat slowing down indeed, at least based on the previous reading, and we'll actually have to see what the trajectory is like for the next reading. But that could actually be a sign of a so-called inflection point, meaning that inflation is indeed sort of slowing down, or could be slowing down. And the main implications of this on, again, stock prices, which I really need to get to in just a bit, are that if, say, the next inflation reading is good, especially in core CPI, and we also get sort of this continued trend of the core CPI, or even better, the overall CPI inflation reading sort of trending down or slowing down, this could actually be the signal for the Federal Reserve to not necessarily have to say that they're going to raise interest rates that much, which, by the way, is one of the main causes right now for this broad market sell-off in stocks, right? Especially in higher growth names, which, by the way, inflation mostly or most affects these higher growth names, which means even if we have like a broader market sell-off, which we kind of do, the ones that are, or the stocks and companies that are being sold off the most are ones that are sort of higher growth versus more like value, so-called value plays, which are more established companies, but that aren't necessarily growing as quickly, but also mostly do pay out a dividend, which is sort of for shareholders to receive a bit of cash, right? They pay out versus the amount of growth potential that they have. So usually the dividend paying companies, people prefer in a higher inflationary or more uncertain period where they think that higher growth plays will not do as well. They prefer to park their money in value plays, especially dividend stocks, where they can sort of earn an income from the dividends, right? This cash that's coming in, and not really have to worry about like the stock's growth or whatnot, right? Because these stocks or these companies are not going to be growing quickly anyway, so the stock prices will probably not change too much, but people prefer collecting this income over, say, the previous year or the past couple of years where people have traditionally more invested for the growth of the stock prices themselves. And so the sell-offs that we've seen, especially in the last week for equities, which is stocks, is due to mainly the Federal Reserve becoming even more hawkish than before. So they sort of adjusted their tone, even compared to, say, the previous week, and now saying that they're more comfortable with not only raising interest rates more quickly, but also to a greater magnitude, perhaps, to sort of combat inflation that they think is quite or more serious than they've thought before. And also, since employment they think is still going strong, they also think that they can raise interest rates a bit more without sort of harming employment that much. So with that, are stock and other investable asset prices going to stay low or go even lower, meaning that we're not quite at the bottom yet? Or could we actually be quite likely to see an inflection point up in these prices, and thus there being, especially because there's an inflection point in inflation slowing down, right? And thus making the Federal Reserve back to being more dovish. Well, I think right now it's more likely and more safe to say that we might see more lows. But personally, I've been very much invested in the market because I can sort of afford waiting it out, being sort of, young, relatively speaking. I don't really mind waiting it out to go a little bit lower, but in my opinion, there are definitely some good buying opportunities at these current levels. So even at these current prices of stocks, I'm already very comfortable in buying a lot of them, right? Or certain companies, actually, specific ones that I think will do well in the long run, right? So I'm definitely thinking very long term. Your investing philosophy or your investing goals rather might be very different, right? For example, if you're closer to retirement, you might not want to invest in companies with that long of a horizon, right? Maybe you prefer maybe preserving your wealth, collecting dividends, and then selling off parts of your investments when you actually need to spend it, right? In retirement, for example. So me and also other YouTubers, many finance YouTubers will say that they don't really give like financial advice. And I think a big part of it is because everybody's investment criteria is just different, right? Everybody has different reasons to invest, different goals, and so on and so forth. And also because what I do and what I invest in doesn't mean it's good for what you might want to invest in, right? Or might not be the best choices for you. I've simply done a lot of research in what I've invested in, and I also believe in the companies that I invest in. You might actually have a different realm of expertise. You might understand certain companies a lot better than I could ever, and thus you might want to choose to invest in those instead, right? So to each their own. Everybody has to do their own due diligence. That's sort of the disclaimer. So now let's get into what I've been invested into. Again, I'm mostly invested, right? Most of my assets have already been invested. I still have some cash on the sidelines, but a lot of it has already been invested because, again, I do think that there's a chance for us to get that inflection in inflation, and thus the interest rates not necessarily going as much more or going up that much more compared to what's planned right now. Because right now, and I also think currently there's too much fear, a lot of fear priced into the market based on not only technical support, but also a lot of the negative catalysts that's been happening, right? The war, obviously inflation surrounding everything, and also, China lockdowns and so on and so forth, the Federal Reserve, a lot of negative catalysts, a lot of negative sentiment, and typically, oftentimes, this creates great buying opportunities, especially if you're like myself, a very long-term investor. So here are some of my largest stock holdings, as well as just some general investment ideas. And by the way, I do practice dollar cost averaging, which is sort of averaging in, instead of putting all my money into a stock on the same day, I try to spread this out over several days, especially on like dips, especially recently with a lot of volatility, ups and downs. I try to just buy a little bit whenever there's like a down day. And that's what I've done in the past few weeks. And now I'm mostly, again, deployed the majority of my money at this point, by the way. So with that, my first main investment idea, and this is not original at all, I never said it was. I definitely referred to other YouTubers, like Meet Kevin did a great analysis on this company and stock, and there's just a lot of sentiment. It's not like a meme stock, right? But there's a lot of good reason, in my opinion, and great analysis around this company that is none other than Elon Musk's Tesla, which, by the way, not only does electric cars, right, obviously, and just based on their electric car business and the growth that they've had and are projected to have based on their recent earnings call, which actually just happened last week, and they killed it, by the way, which made the stock price actually go up about 10% right after earnings. But then after the Federal Reserve did their shenanigans, the price came down a bit again, after which I actually bought more. But I think Tesla is actually a great play right now, my largest holding by far, because they have so-called supply chain clout, which means that a lot of suppliers, even though there are supply chain issues and shortages, right, in materials, they like to give priority to companies like Tesla because of how well they're doing, how much of a perhaps world changer they are, and how much good reputation that they have. They get priority for these sort of, materials, and thus they are not as severely affected by supply chain issues and also inflation. That's reason number one. Secondly, as a growth play, it's just so much growth that, in my opinion, has yet to be priced into the stock price, especially with their new factories coming online. Giga Texas, which recently had their Texas rodeo event, and also Giga Berlin. And not only that, but it's been said that, and they've said it themselves, that they're trying to their factories are so well done, especially these newer ones. They sort of figured out factory building to a precise point where they're able to open new factories efficiently and somewhat easily. And if they do so and scale up even more factories, essentially copy and pasting what they already have working for these current factories, they could actually scale up extremely quickly in terms of vehicle production. And not only are they doing electric cars, the reason I'm so excited for Tesla is that just based on their electric car projections, they're already a pretty good deal in terms of the stock price. And this is all relative, by the way, right? An investment is always compared to other possible opportunities out there. And after doing so, I think Tesla is one of the best, because not only is their electric car business one that is already seeing really high growth projections, and I think it's pretty safe, right? It's not as risky in terms of like there being less demand, or like people suddenly not wanting to buy Teslas anymore, right? Or like people suddenly not liking Elon Musk anymore for whatever reason. I wouldn't personally bet against Elon Musk or Tesla in that regard, so I think the demand will definitely still be there. That's another reason. But besides the electric car business, there are actually a lot of other things to be excited about, such as AI robots, or AI in general. There's like full self-driving. They say in their recent earnings call that they're going to be doing robo-taxis as early as 2024. Robo-taxis at scale is going to be hugely profitable, more importantly, which will be reflected, which will be what is reflected in the stock price, right? And they have other things like energy, right? In terms of like solar, but that's more of a smaller part of their business. But if they put it all in-house, right, incorporate that into their Tesla vehicles, robo-taxis, Cybertruck, that could be huge. And not only that, but they're also doing robots, like actual humanoid robots, the Optimists. From Elon Musk, according to Elon Musk, this could actually become an even larger business than their electric vehicle business. So that could actually be huge as well. And it's definitely not yet priced in to the Tesla stock price, and I think it should be soon. I mean, I think it's realistic to expect it to be executed because of how well they're doing these full self-driving developments with AI, with Tesla being one of the premier AI companies actually, because of how well they can collect data and just develop AI and machine learning that way in order to be able to then develop these robots and scale them up as well. And yet another investment idea that I have right now, and again, I didn't come up with this, but I definitely did some research, referred to not only other YouTubers, but also real financial like media outlets. I actually follow many on a daily basis. So this is sort of an informed, an idea, so to speak, but this is the reopening play. And what I mean is people, especially in the US, right, spending more, especially on going out, right? So going out and having fun, especially since the pandemic sort of subsided in the US, there's sort of people and consumers are going out with a vengeance, so to speak, to have fun, hang out, and go to places like Disneyland, wind resorts, and so on and so forth, right? So I believe a lot of these reopening plays, which recently have also been beaten down, you can look at some of these casino plays, right? Some of them are also in Macau, which might sort of hamper their current price as well. So I think that Disney is actually a good idea, in my opinion, right now, given the stock price is at a sort of near pandemic lows level, which is obviously pretty low, but that also makes it a decent deal, right, in my opinion, especially since in the next earnings call, we actually see that they say that the reopening is actually in full swing and better than expected, with a lot of consumers spending a lot of their money in their parks, which based on people's observations they have, this could actually be huge for the stock price as well. And that is pretty much all I want to share in today's video. Let me know what you think though about inflation, stocks, or whatever, and I'll try to reply to your comments. Also check out the description for links to free crypto that you can sign up, get by just signing up, and also my free YouTube course linked in the description. And with that, I'll see you in the next video. Peace.